11th, and of course this is the video log. It takes 30,000 to a million. It's gonna happen. I don't know what episode this is. It's been a while. Things are moving slow, but we'll get there. Now, after I review the account, I'm gonna show you what happened in the account, review some of the large positions and their movements, and then I want to talk about gold miners, one of my favorite topics, and just do a quick glance at a few of the major gold miners and what's going on with their balance sheets. Well, their fundamentals, really, not necessarily the balance sheets, but we're going to look at some numbers, few key numbers that I think that really popped out in my eyes, and I'm going to compare them to some of the big companies, like, well, another big company that everybody should be comparing themselves to, which is Apple. So I'm going to run through some numbers, and I'm going to give you an example of a gold company that's doing well and a gold company that's doing mediocre at this rising gold price environment. All right. So, well, that went actually kind of smooth. I don't usually talk that smooth, so don't get used to it. Okay, so here it is. This is the account. 1 second. I'm sitting at 79,432 and 92.3 cents. And so here are some of the big positions. Oh, they've changed this. All right, some notifications. Elon Musk says ready for arrest as he reopens California plant against local order. It's interesting. The guy is definitely stirring up some feathers. Is that the expression? Stirring up? Was it fluffing feathers? Stirring some crap up? Anyway, tell me what the expression is. I forget. That's interesting. It's new. Okay, too many notifications. They're trying to make it like the phone, I think. So, this is the options list here. I have all these options that are going to expire. I went through them maybe last episode on the 15th of May. So, in about 4 days. And then I will just re-roll them. So, that's free money right there. I don't think many of them will execute. I think the chemical ones will. So, there's a $10 $10 calls of chemical here. The energy fuel ones are going to expire. That was the freest money I've ever had. And the oil one is just not correct, right? Because OIL doesn't actually exist anymore. I made a video on that. So these are going to expire worthless here, NYMT, and this one's also going to expire worthless, the Norwegian cruise liner. I don't know about the $10.5 one for chemical. We'll see. It's too early to tell, but the $10 ones will most likely execute, and I'll be raising my cash position even further than it already is. If you're interested in what my cash position is, I'll gladly show you. It's $92. No, just kidding. It's actually negative because I'm on margin. $13,000 or 14.4%, which is a really good ratio for me at this point. I'm really happy about that. But with the decrease in margin, of course, my total market value is staying fairly constant at around $92,000 this far. Now, I have many more options that are active. Of course, most of these are sells, as I like to collect premium. And if y'all been with me on these video logs, you know that. I've only bought a few options. One of them being Apple. I have a $300 call. It's expiring on the 2021 on June 18th. So that has been doing absolutely just fantastic, and I expect it to continue to appreciate. The delta on that is turned up. Now, what is the delta, you ask? I've also explained that. In fact, I kind of want to click it to show you how much the delta is increased. The delta is you can't see it on the video, but it's 0.625 at the moment. So what that means is that for every dollar that that Apple increases, a stock of Apple increases, for every dollar, this option will increase around 63 cents. Now multiply that by 100, because every contract operates in 100 shares. That would be $62. So that's a pretty substantial increase for every dollar. $62. It's pretty good. Now we're talking leverage, right? Okay, so Apple was one of the few stocks that went up today in the market, and of course I benefited greatly from that. In fact, $750 of my um, account here, the plus side on the plus side is contributed solely from Apple, from the option and from my 80 shares position, which is my largest one in the account. A good thing for that, because otherwise I'd be deep in the red. As you can see, most of everything else dropped. Now, O is an interesting one. Talked about it earlier. I very much would like to accumulate more O. I really want the monthly dividend. I think it's gonna do wonders for my account, especially if the number gets big enough to where it substantially starts, accumulating, reinvesting, and continuing to grow. So I'm really excited about my O position. So Apple O are my main positions, no pun intended, because it says main right here. It's Main Street Capital. It's not. Anyway, moving on. So I have a couple options sold against the RSX, but even if they execute, I'll still have 30 shares left. It's not a big deal. Wheat and precious metals down $50, chemical down 105, but options are up because chemical's down, kind of work in opposite directions, so it kind of cancels itself out a little bit. SIL down 45, so the silver sector moving down, the precious metal sector moving down as a whole a little bit today. $52 for wheat and precious metals. So are the emerging market dividend fund here. Energy transfer is about flat. And then a bunch of other stocks like Visa, Rio Tinto down $74. SBRA, the REIT, the Real Estate Investment Trust, it's down $100. I have a call sold against it. I'm not really two calls against this position, so I'm not too concerned if it hovers around the same level. LUV is Southwest Airlines, and is down $51. So about $1 a share. EWU is the United Kingdom fund, and it's down $22 today. I've sold an option against it as well, so I don't mind it sticking around sideways either. So for the most part, it's not as bad of a day as it could have been. I'm not beating the markets today. I always like to measure myself against the markets. So let me see. A week performance is 0.5, and then week, as in WEE. Okay. Not week as in WEAK. So the markets was actually about flat today. Let's see the week performance plus 1.85. So I'm getting beat on the week, but let's see on the month. The market is up 6.5, and I am up. I don't know yet. That's an awkward week. All right. Well, I guess I'm losing big time then. Really? It doesn't sound right. Anyways, I'm definitely beating it on the month. Maybe. How come these numbers are so off? Let's see what it says here. Sorry about that. I haven't actually checked this. Yeah, well, beating on the month, so that's good. And on the 3-month, I'm beating on 3 months. I'm only down 11.7%. Market's down 13.37. So I was sitting in a lot worse situation on a 3-month chart just even a couple weeks back. All right, that's enough about the account and my comparisons to the market. This is how I'm doing. This is how it's evolving. If you're interested in any of my positions, feel free to pause the video, look at the number of shares and the symbols that I have here, and you can deduct all other relevant information that you might be interested in based on those two things. Now, the screen's going to go bright, and I'm going to be talking about a quick snapshot, all right, of the gold miners, and I'm going to compare them to Apple. So I was scrolling through the data, and on my Interactive Brokers account, and they have a pretty good interface. I recommend it if you want to get really deep and technical into research, and on your phone. And they have numbers and statistics for all the different stocks, and I decided to try to take a shot and to just get a better idea of how the miners are stacking up against some of the more popular companies at the moment. And there's a few numbers that really stood out to me. So I'm gonna run through some numbers and let me see. I want to see if you guys are just as shocked as I was when I saw some of these numbers. So first, let's take a look at a company like Apple, which is the standard, honestly, right? I know the screen is bright, but bear with me here. So let's take a look at some numbers. This is a very good company, surviving very well during this time, and it's been a standard for many other companies. I want to point to quite a few numbers, actually, specifically. First, the earnings per share. All right, you can see these numbers. They're around $12. This is the earnings per share for next year estimate, which is 14.77. Now, this is a pretty expensive stock, so these numbers are going to be quite high here. But let's get to the percentages. Okay, so earnings per share growth this year. So it's actually a negative number. It's minus 2.6. So the earnings per share fell, all right, this year. Earnings per share expected next year, a climb of 19.67%. Okay, earnings per share in the next 5 years, 11.47, etc. All right, in the past years have been 13%, so it's a little bit of a slowing down expected. Other numbers that I want to point out too is all these. Okay, so first of all, return on asset, return on equity, and return on investment. These numbers are very good. They're very good for not just they're very good for any company. I mean, no one's ever gonna. Well, no, I don't say no one, but it's very hard to beat Apple on these numbers. Okay, but let's take a look at this. Right, gross margin, operating margin, profit margin. So 38, 24, and 21. Okay, I know it's hard to memorize all these numbers, but just get an idea of what they are like. All right, I'll go back and forth, and then these numbers, payout. What this means is the payout is basically, what percentage of their profit are they paying out in dividends. Okay, so you can see more information if I hover out. What does it say here? Dividend payout ratio, right? So you actually want this number to be low. Okay, that means you're keeping more money to themselves, and they're using it to reinvest in the company and whatnot. Okay, grow, or pay it out. I don't know, in higher employee salaries and options, whatever. But you want this payout ratio to be low. If it gets too high, then that means the company is too focused on dividends and not on growing the actual company. It's like, the golden goose laying too many eggs and not eating enough. Okay, I don't know if that was a good analogy or not. Okay, so I want you to look at these numbers here. And now we're going to go to a company like Newmont. Okay, actually, how about Barrick Gold? Okay, now remember these. Earnings per share. Okay, over here, the growth, the margins, return on asset, return on investment, etc. Okay, Barrick Gold. Here's what's happening here. Look at this. Percentages. EPS this year. Okay. Earnings per share growth this year. 270%. All right. The price didn't even go that much. Okay. Maybe close to doubled. But that's 270%. How much did Apple go up? All right. Minus 2.6. And it had similar price action here. Okay. To account for that. Earnings per share next year. These numbers are a lot bigger. Look. Let me adjust that a little bit. Twice the numbers. Okay, an expected earnings per share growth. All right. Now, other important numbers. Let's take a look at these. Of course, these are not going to be as good as Apple. The return on asset, return on investment, return on equity, return on investment. However, the gross margin of Barrick Gold is almost as good as a growth margin for one of the most praised companies for gross margins. Let me put at the same level. So if I flick through, you see the same location where the stock was. It's 30% versus Apple's 38. Okay, and Apple's operating margin, profit margin 24-21. Look at the operating margin for Barrick Gold, 72, and profit margin 41%. What? Payout ratio is only 8.3% versus 23.9. That means Barrick Gold might increase their dividends. I mean, they might become a dividend play. All right, all these gold companies, well, not all of them, but some of them that we'll look in specific, might become dividend plays. It's crazy. Okay. So you saw these numbers, right? 270% versus minus 2.6. Now let's take a look at Kinross Gold real quick. Okay, earnings per share this year, growth 44%, beats negative 2.6. Okay, look at these numbers, they're all positive, which is great. Return on investment, return on equity, etc. Gross margin 29, operating margin 29%, profit margin 21%, payout ratio 0. I think they cut their dividend a long time ago, actually. Now, not all gold companies are doing that well. Let's take a look at one foreign one. I think this one's from Ashanti Gold, Anglo Gold Ashanti Limited. I think it's South African. Earnings per share this year looks 68%. That's fine. That's great. But obviously, not all indicators are doing very well. As you can see, the return on assets is actually a negative number. Return on equity negative. Return on investment is 7.7. Gross margin is still not too bad. It's 25.8. Operating margin 17%. And profit margin negative 0.3. Now this looks more like a gold company in normal times to me. In normal times, right? But actually, the metal is quite high. So these metrics should be improving quite a bit. And now finally, let's go to our very own here in the US, Newmont Mining. Boom! Look at these numbers. Look at this. Earnings per share growth, 800% versus negative 2.6. 800. Expected earnings per growth, EPS growth next year, 49%. Then 5 years, 25%. All right, let's take a look at the other numbers here. Return on asset, pretty standard, 9. Return on equity, 16. Return on investment, 10. Gross margin, 47%. That's huge. Gross operating margin, that's bigger than Apple, right? Operating margin, 35. Profit margin, 35. Payout ratio is only 12.9%. Another possible dividend play. It's crazy. It's crazy. And the stock hasn't moved that much. Over the last year, it's only gone from 40, 35, 37 to 62. It hasn't even doubled. And it has earnings per share growth of 800%. Not all gold companies are doing this well, but Newmont is just doing terrific. And I guess the reason why it's not skyrocketing is because people are anticipating lower gold prices and whatnot. But I just want to show you how the fundamentals, the technical, the numbers. I don't know if you want to call them fundamentals. It's not quite fundamentals, but the numbers, what the company's actually doing as far as what they're reporting here to us, is pretty eye-popping. Okay, so now, I own some gold miners. I don't have Kinross anymore. Full disclosure here, I have a Barrick Gold and I have Newmont. I don't have Anglo Gold, Ashanti, and obviously I have Apple. But it's pretty impressive. It's going to be very hard to sell a company like this. If you see these numbers, sorry, I think I may have scrolled down. Now you can see all these numbers pretty easily. So this is Newmont right here. Earnings per share 800. Okay. There it is. Gross margin 47%, operating margin 35, profit margin 33, ROI 10%, ROE 16, and ROA 9%. So, that's what I've been. It really stuck out to me of how undervalued these companies are, even still after they've gone up like 80%. I showed you earlier how I keep 2 shares of Newmont because hopefully that's my first quote unquote 10 bagger or something that appreciates, you know, 10,000%. So I'm gonna go to Newmont real quick and show you how low, at what price I actually had Newmont at one point. And here it is. You can see that plus 288%. I've shown that in another video. Obviously, I sold a lot of them, most of these shares in this account when it reached like 60% up or something like that in 2016 in the beginning. But I do have like maybe 150 shares in a different account. So I am profiting from the rise in Newmont. But I'm just astounded as to how, much money these guys are going to be raking in and are raking in at the moment at these gold prices. And if the gold prices go up and they're able to score some of these future contracts, I mean, these stocks are going to be just printing money. All right. Now, with that thought, I don't want to pump these stocks up too much. Of course, there's a lot of risk in buying them, as well as there's a lot of risk in buying any equity. You could lose all your money, and that's very important to know. Okay, so you shouldn't trade this company just because you heard it from someone like me, like a random guy with a video log on YouTube. Make sure you do your own research, and also, if you're not sure about something, or even if you are sure about something, consult with a professional advisor, especially when you are dealing with a lot of money. Like if you're putting $100, $1,000, even $10,000, maybe you can afford to risk it because you're earning, especially if your earning power is high, you can afford to make up for that mistake. But if you're dealing with more than that, I definitely recommend advising with a professional financial advisor and not getting your advice off of YouTubers. All right, with that said, I'm really excited about what's going on right now in the account. I'm almost back up. I'm like $10,000 back off of my highs on Robinhood account, and I'm looking forward to getting that million. All right, so I'll probably record another video on Thursday. If you watched all this all the way till the end, and I want you to let me know because I appreciate y'all. So put down in the comment below EPS, like earnings per share. Okay, EPS. Peace out.